If you could buy just one ETF for the rest of 2025, what ETF would be the one that could build you some serious wealth? In today's video, we're going to be talking about 4 to 5 incredible ETFs that can build you serious wealth. And each one is very different in the way they're constructed in their strategy on building wealth. So today we're going to be looking at these 4 to 5 great ETFs and seeing which one is the best one for you to buy and hold for 2025. Hey guys, my name is Steve and I run the Frugal Expat website where we try to help people to save more and invest better. And like I said in today's video, we're going to be picking just one ETF that we can buy and hold for the rest of 2025. Now the reason I'm talking about just one ETF to buy and hold for the rest of 2025 because you know there are so many great ETFs and I talk a lot about these different ETFs. We have like 4 or 5 great tech ETFs. We have some growth ETFs, dividend ETFs, international ones, covered call ETFs. There are ETFs all over the place. I mean, there are so many ETFs. I mean, there are probably more ETFs on the market today than there are stocks on the US stock market. So it is hard to kind of swim and dive through and figure out which one could be the best one for you and your strategy. I mean, when I talk about growth ETFs, we have QQQI, SCHG, VGT, XOK. And if we're talking about dividend ETFs, you have SCHG, VYMI, VIG, FDVV, DGRO. But which one could you add to your portfolio? You don't need to mix and match, but we just want to make this simple and easy for you. So let's get started and let's dive into our ETFs and see which one could be the best one for 2025. Our first ETF is going to be SCHG, which is the Charles Schwab US Large Cap Growth ETF. Now this ETF tracks about 220 to 230 different growth companies on the US market. Now these are all large cap growth companies. So we have companies like Apple, Microsoft, Google, Tesla, Nvidia. These are some of the best companies on the market that could grow your wealth. And the reason I picked SCHG is because it is one of my favorite growth ETFs to buy and hold for the long term. It's got a low expense ratio of 0.04%, meaning it costs about $4 for every $10,000 invested. It also has a great share price of anywhere between $27 to $30. Right now it's sitting at about $30, so it's continuing to grow and grow your money. Now this ETF is a great one because it's been around for a pretty good long term, and for the last 10 years it's averaging about a 17.83% annual return. So that is really growing your money and is beating kind of like the S&P 500. So it's a good growth ETF. Now, like I said, you could add some other growth ETFs like a QQQ, QQQM, VGT, XOK, but I'm sticking with SCHG because it's got a good share price. It's got a good expense ratio. It's got a good annual return, and it's a great one that you can buy and hold for the long term. So, should you own SCHG? Well, the down part about SCHG is if there is a bear market or even a crash, it's going to go down about maybe between 30 to 40%, while maybe a more stable and income producing ETF may not go down as much. But with those risks, you also have the good returns. Like I said, it averages about 17.83% over the last 10 years, and that is an incredible number. So, is this the ETF to buy and hold for 2025? Well, stick to the end of the video and I'll say which one is the best. Our next ETF is going to be VYM. Now, VYM is the Vanguard High Dividend ETF, and it produces a pretty good dividend yield. Now, in the past, it's done around 3%, but right now it's doing about 2.53%. So the yield is not as good as it has been in the past, but with interest rates coming down soon in the near future, it could pop up, and that means investors that are investing in this ETF could have a better yield and a good performance. Now, year to date, the performance is about 9.82%, which is beating the S&P 500. And that's good news to you guys because the S&P 500 is like the gold standard on ETFs and markets. And when a good ETF like VYM is beating it, that raises eyes and people start to take notice. So the reason I like VYM is because it's got a pretty good yield over the long term. It's got a pretty good performance over the long term. It's got great established companies like JP Morgan, Home Depot, Procter & Gamble, Coca-Cola, and Walmart making some of the top 10 holdings in this portfolio. So we have well-established companies, we have good dividend paying companies. It's got a portfolio of over 580 different holdings, so you're getting a good selection of several different dividend paying companies on the US markets. So if you're looking for some steady income, some good growth in your dividends, and a good price appreciation with your ETF, VYM is a great one to buy and hold. Now, if you're looking for something with huge price appreciation like a growth ETF, well, VYM may not be that ETF for you, because as we have seen in the bull markets, we have more of those growth companies that are skyrocketing, but with VYM, you got steady income. You have a good mix of steady companies providing that dividends and some price appreciation. So VYM is a great one. If you're looking for some income, you're looking for some dividends, you're looking for a pretty good performance overall, and it is a good one to kind of buy and hold for long term. But is this the one for 2025, just the one ETF to buy for the long term? Well, stick to the end of the video and I'll tell you which one it is. Our third ETF is going to be VYMI. Now that sounds very familiar to VYM, but the I is for international. Now the reason I included VYMI is because possibly you could have an international exposure to your portfolio. Now right now the US market is doing pretty good for the most part, but with the dollar going down, international markets are skyrocketing and crushing the S&P 500. And VYMI is one ETF that you could buy and hold for long term. Now there are some other great international ETFs like VXUS, VGK, SCHG, but VYMI is my pick for 2025. The reason it's my pick, right now the year-to-date performance is about 27%. For the long term, it's been averaging about 9.8% over there since inception, and for the last 5 years, it's on about 14%. So that's incredible news. Now, the yield right now is sitting at about 4%. So if you're looking for some good dividends, international exposure, an ETF that's got about 1,000 to 1,600 different companies, and it's got a great price appreciation for at least for year-to-date 2025, VYMI is the dividend international ETF that you could buy and hold. Now, historically, US and international markets have gone back and forth. When the US is doing great, internationals are not doing great. When internationals are doing great, US is not doing great. So this is a great one for 2025. But is it a good one to buy and hold for the long term? Now, the downsides of this is historically, US market right now is owning about 50 to 60% of the world market. So when the US market does have a boom, internationals will go down a little bit more. So is this the one to buy and hold for 2025? Well, we shall see at the end of this video. Our fourth ETF is going to be QQQI. Now, QQQI is a covered call ETF from NEOS, which is a great dividend producing ETF that's helping people to have a lot of income. Now the yield is anywhere between 13 to 15%. Right now the yield is sitting at about 13.65%, which is pretty good. Now they produce dividends monthly, so you get monthly cash. Now that is amazing news to a lot of people. Now the reason I like this one, it's got a great portfolio of NASDAQ 100 companies. So it is selling covered calls on these companies like Apple, Microsoft, Tesla. I mean, these are some of the great companies, and it's making some money and it's paying us some of those dividends. Now, the reason I like this ETF is you got great yield, you got good companies, you are producing income. So if you are a retiree or you're looking for some of that monthly income, this ETF could be the one that you can buy and hold for 2025. And right now it is growing massively because people are liking it. NEOS created this recently, and so it has become kind of a new phenomenon having these covered call ETFs. Covered calls are now easier than ever, but having a professional manager do it for you and then you getting paid anywhere between 10 to 15% return monthly is kind of very intriguing, right? So QQQI has been one of those top ETFs that have been popping out, and it could be one that you could be buying in 2025. Now, the bad part about QQQI is cover call income is not always guaranteed. It's got an expense ratio of 0.68%, meaning it's quite expensive. But when you're trading expenses for some of that professional management, which means you're still getting that good income, and the price appreciation is not so bad. So should you be buying QQQI in 2025? You could be, if you're looking for some income. If you're looking for a good cover call ETF that you could add to your portfolio, it could be the one ETF that you can buy and hold for 2025. Well, let's see at the end of this video. Now, we just broke down 4 great ETFs, as in SCHG, VYM, VYMI, and QQQI. These are some great ETFs that you could be buying and holding for 2025. But the one ETF that I think could be the only ETF that you buy and hold for 2025 will be VTI. Now, VTI is the Vanguard Total Market Index Fund ETF. The reason I picked this one is because it encompasses all of these kind of strategies together. Warren Buffett once said that you could just pick the S&P 500 and just buy and hold for the long term. And he plans to do that with his wife and the inheritance he gives her. He's gonna just have his managers put all of the money, 90% to an S&P 500 ETF and about 10% into bonds. Now, VTI is not an S&P 500 ETF, but between that and VOO, it's got an 88% overlap. So only about 12% is getting some of those small caps and mid caps into this fund. Now, the reason I like this is because it's got a low expense ratio, 0.03%, meaning it costs about $3 for every $10,000 invested. This ETF encompasses the entire US market, so you're gonna get growth, dividends, you're gonna get some of those great properties of all these ETFs. Now, it doesn't have any internationals, but about 40 to 60% of the companies on the US market are investing in international waters. I used to live in Taiwan, and we had Frugal living there. We had a lot of different companies like Micron and some other companies that are on the US market, but they're in other international places all around the world. And that's the good news about having this ETF. Now, J.L. Collins, in his book, The Simple Path to Wealth, I'll leave a link in my description, talks about just buying just one ETF or index fund and kind of making it a simple way. And this is why I picked VTI. If you're not looking for a way to make your portfolio advance and you just wanted to make it simple, easy, and just buying one, well, VTI is that ETF. Right now, in the last 10 years, it's averaged about 14% annually, which is beating some of those dividend ETFs. It's got some of those dividend ETFs into the portfolio. It may not have a great dividend yield. The yield is sitting at about 1.3%. That may not be sexy, but this ETF is one great ETF that a lot of early retirees have put all their money into, and then they said, let's sit back, retire, let's live off some of the yield, let's sell some of it and kind of enjoy the price appreciation. Now, right now, I have a lot of money in VTI because I think it's a great ETF that creates a good core part of your portfolio. You can add a good dividend. You can add a good growth to a part of it. But if you wanted to keep everything simple, adding VTI is the way to go. All right, let me know in the comments. Did I do a good job? Is this an ETF that you may be buying and holding for the long term? Which ETFs do you think I should have mentioned instead of SCHG, VYM, VYMI, and QQQI? Do you hold any of these ETFs? Let me know in the comments, and I'll see you in our next video.